I'm John McLeese, and this is Bold Radio. Sometimes in life, you just need some good advice. No one is an expert at everything, and that's why we're proud to present the Bold Radio Expert Series, where we welcome a qualified and experienced individual to offer sound advice on an aspect of running a business. Our guest today is a highly qualified financial expert. We're pleased to be joined by Tyler Evans, insurance specialist from Credential Financial, working in partnership with Steinbach Credit Union. Tyler will bring his expertise today on the subject of succession and estate planning from an insurance perspective. It's there when you don't need it, but more importantly, it's there when you do need it. Insurance is an important investment to make in many facets of your life. Today, we'll talk about the insurance considerations a business owner should make when it comes to succession and estate planning. Tyler, welcome to the program.
Thank you very much.
It's great to have you. What is estate or succession planning?
Well, estate or succession planning is realistically any action that you can take that's going to reduce your taxable position when you pass away. Realistically, that's the simple, very broken down way of thinking about it.
So it's something that's going to reduce your taxes when you pass away.
When you pass away, yeah.
So that's really what it's about.
What it boils down to.
There's a lot of planning that you can do in advance. So what would a person want to do then for estate planning? What are some of the steps that you would take them through?
Well, typically, we are working in concert with a financial advisor, an investment specialist, an accountant, your lawyer, those people, those roles in your life that are your trusted advisors. And they're the ones that we work in concert with, and we take a lot of cues from them. I've been very fortunate to develop a lot of positive relationships with some of those people in the city and work very well with them. And a lot of times they have determined that we have a need for the business owner. They have come to us and said, this is where we're at with this person, and we've done this, this, and this already, and can you help us with the insurance aspect? So we're taking a lot of cues from them.
Now let's talk a little bit about life insurance. Mm-hmm. What role does life insurance play in estate planning?
Well, life insurance can be a really valuable tool in financing and offsetting some of those taxes that we all know is going to happen. The people who have done extremely well in life and building something for them and their family often end up sitting with us and with their lawyer and with their investment specialist and sitting there and saying, I've done very well, but the CRA is going to want a little bit of this.
So the CRA, Canadian Revenue Agency, they're going to want to take taxes from this estate at the event that somebody passes away.
Correct.
And there's an opportunity to prevent that.
Well, there's an opportunity to reduce the amount of tax that you're going to pay. I don't think we can ever run away from it, and we shouldn't think of it that way.
Fair.
But if we're looking at whether we can, so to speak, finance an obligation like that on a dollar-for-dollar basis or on a reduced amount basis, then what would you rather choose?
Definitely rather choose the reduced the method. So life insurance can be used to reduce taxes.
Correct.
How would that work? Just describe it very quickly.
Well, in layman's terms, no one would ever put into a life insurance policy dollar for dollar, or else you'd never do it, right? If the benefit equaled what you put into it, you might as well just stick the money in your sock drawer. Mm-hmm. But if you can, say, finance $500,000 worth of life insurance at, say, 45 cents on the dollar, then that becomes very attractive to a business owner who is sitting there perhaps with his accountant saying, I know that at some point I'm going to owe X amount. Should we pay X amount, or should we pay 60% of that, 50% of that, 40% of that? This is all obviously depending on someone's age and their business situation and their health situation. But in a worst case scenario, the business owner is never going to put in the amount that they're going to get out in premium. So that becomes very attractive to someone.
Tyler Evans, insurance specialist with Credential Financial, working in partnership with Steinbach Credit Union. So, Tyler, I'm working with an investment advisor. Mm-hmm. how would the insurance component fit into the plans that I've already put in place with my investment advisor?
Well, that's a good question, because often when business owners have done very well, we do have a lot of things like retained earnings and money sitting in a company. And sometimes using an insurance strategy to deposit some of those monies with the intent of taking it out in the future in the form of the death benefit can be attractive because of the mechanisms that life insurance is basically built around. So if we've got some monies sitting in the company that is retained earnings or not earmarked for anything, not needed, cash flow for that business is very good, can we put that money to better use? Finance something like an insurance strategy in concert with their other traditional investments as a complement to, an addition to, not a alternative.
So the last question, I guess, and one that I'm sure our audience is probably wanting me to ask is, why would I be attracted to use a life insurance strategy versus a traditional investment approach about, gaining a lot on my investment, a higher return on investment to pay off potential taxes? Compare those two options.
Well, we can either have a traditional investment that is taxed, no different than you earning the money, just like earning it from the proceeds of your business. Or if you prefer something that is private, multiplies your dollar. Basically, we're using pennies to buy dollars. We're keeping it out of the estate. We're keeping it away from probate. And we are basically increasing instantaneously by sometimes very, very large multiples the size of someone's estate. This is a complement to what they've already been doing. We still have the need for traditional investing. It is definitely not an alternative to.
So it's a combination. Using insurance to help plan your estate and to develop a succession strategy. Very important. Tyler Evans, insurance specialist from Credential Financial and in partnership with the Steinbach Credit Union. Thanks very much for joining us.
Thank you.
Bold Radio.